As the U.S. markets are currently closed, Costco Wholesale Corp, trading under the ticker COST, C-O-S-T, last closed at a price of $914.80. Now, while that figure represents a state of equilibrium after the last trading session, many investors look at that price and see the pinnacle of a stable, defensive retail giant. But that perception misses a critical part of the story, something lurking right on the balance sheet that most market commentary glazes over: Costco's real estate portfolio. The company owns the land and buildings for the vast majority of its warehouses. This isn't just a footnote, it's a multi-billion-dollar asset base that provides immense financial flexibility and a level of stability that its competitors who lease simply cannot match. This hidden value transforms the narrative from a simple retail play into a sophisticated blend of retail operations and real estate investment, a reality far more compelling than the market's general expectation. The common belief about Costco stock is that it's the quintessential buy-it-and-forget-it holding. It's the safe harbor in a storm, the reliable performer you add to your Fidelity Wealth Management account for steady, predictable growth. The expectation is for slow, methodical compounding, driven by ever-increasing membership numbers and the sale of bulk consumer goods. However, this view is becoming dangerously outdated. The reality is that Costco is operating with an aggression that belies its simple storefront. It's expanding its high-margin ancillary businesses, like travel and optical services, at a formidable pace, and is making significant inroads in international markets that present explosive growth potential. Furthermore, its command over its supply chain and its Kirkland signature brand gives it pricing power that is the envy of the entire retail sector. To think of Costco as just a defensive stock is to fundamentally misunderstand the offensive strategy it's currently executing. It's less of a bunker and more of a fortress with cannons, a truth that many investors using simpler investing sites might not fully appreciate. Looking at the recent behavior of Costco stock, its ascent above the $900 mark wasn't a sudden surge, but a methodical climb, built on a foundation of operational excellence. In the weeks leading up to its current price, trading volumes have remained robust, particularly around the release of its monthly sales figures. These releases, which precede the official quarterly earnings reports, provide a transparent, real-time pulse on the company's health. We've seen consistent, positive same-store sales growth, often exceeding analyst expectations. This is crucial because in an environment of fluctuating consumer sentiment, Costco has demonstrated an ability to not only retain its customer base, but also increase their average spend. Its most recent earnings call was a masterclass in quiet confidence. Management highlighted membership renewal rates hovering around 93% in the US and Canada, an absolutely staggering figure that represents a recurring, high-margin revenue stream that insulates it from the product margin pressures facing other retailers. This is the kind of metric that sophisticated investors using platforms like Interactive Brokers look for, a powerful economic moat. While other companies are spending fortunes on customer acquisition, Costco's model ensures its customers pay for the privilege of shopping there, a dynamic that fundamentally alters its financial structure. Macroeconomic pressures, particularly inflation, have paradoxically acted as a tailwind. As consumers feel the pinch, they flock to warehouse clubs for value, reinforcing Costco's market position. This trend has been a significant driver of institutional buying, as large funds reallocate capital from more cyclical consumer discretionary names into staples with a clear value proposition. At its core, Costco's business model is a thing of beauty and simplicity. It operates a global chain of membership-only warehouse clubs that offer a limited selection of nationally branded and private label products in a wide range of categories at low prices. The company's strategy is to generate high sales volumes and rapid inventory turnover by offering its members low prices on a limited selection of merchandise. The key, however, is that the company makes very little profit on the actual products it sells. The vast majority of its operating income comes directly from the membership fees. This is the secret sauce. The low prices get people in the door, but the annual fee is what drives the bottom line. This creates a virtuous cycle. The growing membership base provides the capital and scale for Costco to negotiate even better prices from suppliers, which it passes on to members, which in turn attracts even more members. It's a flywheel that has been spinning successfully for decades. Unlike a company like Apple stock, which relies on product innovation cycles, or Nvidia stock, which rides the waves of technological demand, Costco's success is built on a foundation of human psychology, the pursuit of value, and the feeling of exclusivity. For those engaged in self-investing, understanding this distinction is critical. They are not just selling paper towels, they are selling a membership to a club that promises tangible savings, a proposition that becomes more attractive during times of economic uncertainty. This predictable subscription-like revenue is why it commands such a premium valuation compared to other retailers. Looking toward the future, the outlook for Costco stock is shaped by several powerful catalysts and a few manageable risks. The most significant near-term catalyst is the inevitable membership fee increase. The company has historically raised its fees every 5 to 6 years, and the market is widely anticipating the next hike. When this happens, the additional revenue will fall almost directly to the bottom line, providing a substantial boost to earnings per share. This is not a question of if, but when. Comment below what you think the new Gold Star and Executive membership fees will be and in which quarter you expect them to announce it. Beyond the fee hike, international expansion remains a massive opportunity. While Costco already has a presence in several countries, its penetration in markets like China is still in its infancy. Each new warehouse opened in a densely populated international city has the potential to be a significant revenue generator. Then there's the continued growth of its ancillary businesses and e-commerce operations. While its online presence isn't as slick as Amazon's, its growth in online sales, particularly for big-ticket items like electronics and appliances, is impressive. A service like Schwab Intelligent Portfolios would likely model these growth vectors as key inputs for their long-term valuation. The primary risks are a severe, prolonged global recession that could impact membership renewals and discretionary spending, and the ever-present threat of competition, particularly from Walmart, Sam's Club, and online retailers. However, Costco's value proposition and incredibly loyal customer base have proven remarkably resilient through multiple economic cycles. Many retail traders using the Robinhood app see the stock as a cornerstone, less prone to the wild swings of meme stocks. Similarly, investors on platforms like SoFi Invest, who favor a mix of growth and stability, often find Costco to be an ideal fit for their online investing strategy. Its ability to manage inventory, control costs, and leverage its Kirkland signature brand gives it a defensive posture that few can replicate, making it a staple in many Fidelity ETFs and Fidelity mutual funds focused on consumer staples or quality large-cap companies. The tools available on the Fidelity mobile app make tracking its performance and market news seamless for the modern investor. The infrastructure provided by platforms like Interactive Brokers allows institutional players to execute large block trades efficiently, reflecting the deep liquidity and interest in the name. Whether you're managing a complex portfolio or just starting an individual brokerage account, Costco's consistent performance offers a compelling case study in long-term value creation. In summary, the expectation that Costco is simply a safe, boring stock falls dramatically short of the dynamic reality. The company is a masterclass in operational excellence, a real estate powerhouse, and an international growth story all rolled into one. While the market sees a warehouse filled with bulk goods, a deeper look reveals a finely tuned economic engine powered by an unshakable subscription-like revenue model. The perception is stability. The reality is stability combined with a clear, aggressive, and highly profitable growth strategy. It has successfully created a business where customers pay for the right to save, a model that not only endures but thrives when economic clouds gather. This fundamental misunderstanding of its core strengths is what continues to present opportunities for investors who are willing to look beyond the surface-level narrative. Disclaimer: this video is only for educational purposes and not financial advice. Do your own research, DYOR, before investing or donating. Call to action: like, comment, share.